No signs of a Santa Claus rally coming to Wall Street. Stocks sold off again today, led by another triple-digit decline in the Dow. This comes despite solid retail sales in November and as the House votes tonight on a bipartisan federal budget deal. Many Wall Streeters fear that signs of a stronger economy, along with stability in Washington, could prompt the Federal Reserve to start winding down its stimulus plans this month. Here's how the markets closed the day. The Dow fell 104 points. The Nasdaq was down 5, but closed below the 4,000 level, and the S&P lost 6 points. The price of gold also got hammered, falling $32 an ounce, its biggest two-day decline in 2 months.
Well, there's been some anxiety in the market the past few days, and it's often been explained that people are taking profits. So you're probably wondering whether you should be making changes to your portfolio soon. Joining us now to discuss the things you should consider before doing so is Jim Awad. He's chairman at Plimsoll Mark Capital. Jim, always great to see you.
Thank you.
You know, I want you to take us through the thought process of how I look at my portfolio and decide what, if anything, I want to sell because I've got a nice gain in it. How do I do it?
Okay, well, the first thing you have to look at is your asset allocation. In theory, hopefully, you've sat down with a financial advisor or thought through a process where you want X% in stocks and X% in fixed income. And if that's the case, because stocks are up this year and bonds are down, you probably have a higher percentage in stocks than what you started the year with and what you think your asset allocation is. So then you have to ask yourself, do I want to ride with this? Am I willing to have the overexposure to stocks and underweight to fixed income? Or do I want to rebalance and sell some stocks and buy some bonds to get myself back to where my long-term plan is and where I was in the beginning of the year?
Jim, let's take it a little bit more specific, because a lot of people get very emotional about a lot of their investments, especially if they've done well. And this has been a year where you have a lot of gains. And so let's take some examples. Let's say someone came to you and say, you know, I own Netflix. Here's a stock that's been up 300%. Or Yahoo, it's doubled. Let's take Best Buy, up 240%. Let's just say you have these stocks. What do you do?
Okay, well, let's talk generically and then answer specifically with those stocks. Generically, you have to ask yourself, if I didn't own this stock today, would I buy it? Put another way is to ask yourself is, are the fundamentals what I thought they were when I bought the stock? Is the valuation as attractive as it was when I bought the stock? If your answer to any of those questions is no, then you have to sell some of the stock. If your answer is yes, then you're inclined to keep it unless you want, from a portfolio point of view, to diminish the chances of any one particular stock dominating your portfolio. In the case of the ones that you mentioned, Netflix is it's a great conceptual growth story and a growth story, but in terms of valuation, there is no way to get your arms around it. So you probably should take a little bit of profit. In the case of Best Buy, what's attractive there is that they are selling some of the most exciting products in the marketplace with the Android and the Apple, et cetera. But on the other hand, it is a retailer, and retailing is not such a great business long term, and you're subject to tremendous competitive pressures and to the popularity of the products that you're selling. So again, you'd probably want to sell some. So you go from the portfolio question to the question of how much you want any individual stock to dominate your portfolio, and finally to the individual stock selection process. But I would be uncomfortable if any stock were more than 10% of my portfolio.
So look at individual shares to see how much of your portfolio they make up. And as you said, let's say if I've gotten to that point where I sit there and I go, my equity portion of my portfolio is now expanded to 70% from a typical 60%, and I want to scale it back. I look at those stocks or mutual funds and say, would I buy it again today? That's the fundamental question at today's prices, at today's values. And if the answer is no, that's on your short list to kick out, right?
Absolutely. And then you want to sell some of those, or maybe even all, depending on how strong your negative answer is, as a way to get your portfolio back into balance in terms of stocks.
Do you sell it all,
bonds.
or do you sell a little piece of it if you still kind of think, hey, maybe there's a little more in Netflix?
Well, I wouldn't try to short. I'd really stick with the discipline, Tyler. Would I buy it again today? And if the answer is no, I wouldn't try to squeeze a little bit more out of it. Okay. I would go ahead and be disciplined and sell.
Jim, real quickly, we just have a few seconds left.
Yeah.
What do you do with your losers in your portfolio? Same thinking?
Yeah, same thing. Would I buy it today at this valuation? If the news has gotten worse in the company over the last year, then it's down for a reason. You probably want to take the loss. On the other hand, if the news is as good, if the fundamentals are as good as when you bought it and the stock is down, you may actually want to buy a little bit more.
Jim, very helpful. Thanks very much.
Pleasure.
Jim Awad, chairman at Plimsoll Mark Capital.